Good morning, everyone, and welcome to our webinar. This is the webinar by Mazars and EMIS combined on the renewable energy sector and valuation trends in Central and Eastern Europe.
Thank you, Radosław. Thank you for this beginning. So as Radosław said, welcome everyone. Thank you for joining our call today. EMIS and Mazars webinar, Renewable Energy Sector and Valuation Trends. My name is Olga Bong. I'm a head of account management team in CEE, and I have the pleasure of moderating this meeting. During today's webinar, our team of experts at EMIS and Mazars will dip into current overview of the sector, its transformation, opportunities, and valuation trends, following the insightful EMIS CEE Renewable Energy Sector report published recently in EMIS. I will start from few organizational details. You will find the full version of EMIS CEE Renewable Energy Sector report available for you on GoToWebinar on the right side in the handout section, so please feel free to download it. At the end of our webinar, we will secure time for Q&A session to answer any questions that may appear during our meeting today. So I encourage you to participate actively and share questions on a chat box on the right, which you will find on the right side of your screen during our call. And of course, the webinar is recorded. The recording will be available for you in the few next working days. We will be sending you emails with the links to recording. On our today's agenda, our meeting will last for around 15 minutes. We will start from Nikoleta Slavheva, industry researcher in EMIS ISI Emerging Market Group, who will present conclusions from Renewable Energy Sector report. And then we will move to Julian Macmillan, Director of Energy Infrastructure and Environment in Mazars Global Infrastructure Finance, and Radosław Szukiewicz, Director, Head of Valuation in Mazars Poland, who will take you through M&A environment and valuation trends in the industry. And the last 7 minutes, as promised, we will keep for your questions. So let me start, before we will move to our panelists today, let me start with just brief information of who we are as a company. ISI Emerging Market is providing the intelligence and tools that inform our clients' important investment, strategic, and risk decisions. We are a leading provider of macroeconomic, company, industry, and country information for the world's fastest growing and highest potential countries. Our three products, EMIS, CIC, and RED, share a common purpose to help our clients gain critical and timely intelligence for developing countries when information can be hard to find and even more challenging to rely upon. And EMIS is our one-step research platform, creating multi-sector, multi-country research from the most trusted information sources. We deliver content from both reputable global providers and niche local sources. And on top of that, we have a specialist based locally who publish our own analysis called EMIS Insights in order to deepen the knowledge of our users and help them to make the accurate business decision. And the first part of our webinar will be built based on one of our reports on renewable energy, and I will now give the floor to Nikoleta, who will be happy to tell you more about it. Nikoleta, back to you.
Thank you, Olga, and thank you all for joining us. As Olga mentioned, today's session builds on the analysis provided in the EMIS Insights report, Central and Eastern Europe Renewable Energy Sector. Our original analysis includes data on for countries like Bulgaria, Croatia, Czechia, Estonia, Hungary, Latvia, Lithuania, Poland, Romania, Slovakia, Slovenia, and Turkey. In our report, we are placing a special focus on the accomplishments, challenges, and outlooks for the countries within this region. And we also put a specific emphasis on the prevailing drivers and constraints affecting the developments of renewable in some key markets, which are namely Poland, Turkey, and Romania, and also Czechia. Moreover, EMIS Insights report provides information about the prominent players in the renewable energy sector in Central and Eastern Europe. and we give information about the areas of operation of the major companies and their strategic focus. Saying that, I would like to encourage you to check also our EMIS company database, where you can find very interesting and useful information about the leading companies, not only in renewables, but also in other key sectors of the economy, which include financial data, latest news, competitors, etc. And in addition, you can check out the EMIS Tier Watch database if you want to learn more about the dynamics of the M&A market in emerging markets. Now, I would like to focus on the context of growth of the renewable energy sector in emerging Europe. It has been spectacular over the last years, and it was mainly driven by the supportive government policies of the countries in said region. There was another major factor that prompted growth of renewables, and this was the Europe energy crisis triggered by Russia's invasion of Ukraine in the start of 2022. It served like a catalyst for the region to intensify efforts towards deploying more renewable-based capacity. This urgency that we saw in the expansion of renewable energies in Central and Eastern Europe aligns with European Union's Repower EU plan, which aims to reduce reliance on Russian fossil fuels by 2027 and increase the share of renewables in final energy consumption to 45% by 2030. Olga, please, let's move to the next slide, where we can see the evolution of installed capacity of renewables in Central and Eastern Europe. Between 2018 to 2022, there was a significant growth of renewable energy installed capacity. A total of 33 gigawatts of new renewable capacity was added to the grid in the region, and the total reached 115 gigawatts at the end of 2022. It's true that Central and Eastern Europe contributes only 3.4% to the world's renewable capacity as of end 2022, yet at the same time, at the European level, the region has a much higher importance in terms of installed capacity. It accounts for 15% of Europe's total renewable capacity. Olga, please, let's move to the next slide. As you can see, hydroelectric power remains the dominant source in the region. It has close to 50 gigawatts of installed capacity, and the source accounts for 21.7% of Europe's total hydropower capacity. Hydropower has a strategic role in the renewable energy portfolio of Central and Eastern Europe, because it has a very important contribution to grid stability and to energy storage. The source is also very important in the management of supply and periods of peak demand. In 2022, there was a moderate rise in renewable hydropower capacity, and only 108 megawatts of new capacity were added to the grid. And this new capacity corresponded mainly to some small greenfield projects and the modernization of existing infrastructure. Despite the leading role of hydropower, as you can see from the chart, solar and wind were the key drivers of growth for renewable capacity in Central and Eastern Europe over the last years. In 2022, the renewable capacity expansion in the region was mainly driven by solar power, and grid-connected solar capacity grew by 7.2 gigawatts. Solar-based electric power became the second largest renewable energy source in 2022. And this fact reflects the declining costs of installation of photovoltaics, the favorable solar irradiation, and last but not least, supportive government policies. At the end of 2022, there were a total of 32 gigawatts of solar power installed capacity. The country that experienced the most significant increase in solar capacity expansion was solar power, with a total of 4.9 gigawatts added during 2022. And the second leading market was Turkey with 1.7 gigawatts. Wind was the seventh the source that also experienced a fast growth in Eastern Europe. Yet the increase in new capacity was much lower compared to solar. It stood at only 2.1 gigawatts in 2022. At the end of the year, total wind capacity in the region stood at 26 gigawatts. And again, Poland led the ranking with the largest wind capacity expansion with 1 gigawatt added to the grid, followed by Turkey, again, with 789 megawatts of new wind capacity added. Olga, please move to the next slide so we can briefly discuss the generation from renewables. During 2022, renewable energy production in Central and Eastern Europe grew at its strongest annual pace in 3 years. The growth at 7.8% year-on-year was driven by the non-hydro renewable segment, which expanded at an average annual growth of 13% from 2018 to 2022. At the same time, the total electricity generation from renewables in the region arose at an average annual growth of 6.6% for the same period. So, having quickly reviewed what is going on in the region as a whole, let's discuss in more details the renewable energy sector in the key markets of the region. We will start with Poland. Olga, please, let's move to the next slide. There was a really impressive growth in energy, in installed capacity from renewable sources, as you can see from the left chart, because Poland actively promotes investment in renewable energy projects. The country has introduced the Renewable Energy Sources Act in 2015, and investment started piling in. By the end of 2022, Poland had installed more than 21 gigawatts of renewable energy capacity, which constitutes 40% of the country's power capacity mix. While coal-based plants still generate the overwhelming 70% of total electricity, renewables already account for 17% of generation, which is already a remarkable growth. The renewable energy sector in Poland is mainly focused on wind and solar, with both energy sources reporting a significant growth over the past years in terms of installed capacity. Solar installations surged from a humble 300 megawatts in 2017 to more than 11 gigawatts in 2022. And the main driver of this growth was the government My Electricity program. It offers subsidies for residential solar installations. This is a very brief description of this program, but yes, we don't have much time to focus on this. In 2022, Poland managed to grid connect about 5 gigawatts of solar projects. And the photovoltaic market in the country is poised to grow and reach 30 gigawatts by 2030. And this increase is expected to be driven mainly by utility scale segment and increasing interest in commercial and industrial self-consumption projects. At the same time, the growth of wind capacity in Poland was relatively weaker, and only 2.2 gigawatts of new capacity were added to the grid between 2017 and 2022. The slow growth can be easily explained by the 10H rule introduced in 2016. This rule requires turbines to be 10 times their height away from houses or nature reserves. The truth is that the wind market's future hinges on the anticipated revision of wind turbine regulation. And there are discussions over the topic ongoing, but the outcome is still not clear. In addition to this regulatory constraint, a major factor that has an unfavorable impact on the growth of renewable energies in Poland is related to the country's historical reliance on coal. The coal lobby in the country, as well as the mining industry, are influencing policy decisions, and this is leading to delays in coal mine closure. Also, an outdated power grid is hampering the expansion of renewable capacity and also the support for prosumers. Those are individuals who both produce and consume electricity. For example, the changes in the solar payment model, which were introduced in April 2022, transition prosumers to a net billing system, which impacts the viability of home solar power. And finally, I should say that the regulatory hurdles, like the one of similar to the 10H rule, are limiting the suitable land areas, and this also is hindering the development of wind energy. Let's move now to the other key market of the region, which is Turkey. The country stands out as the leader in renewable energy adoption in Eastern Europe. It has the largest hydro, wind, solar, bioenergy, and geothermal installed capacity in Central and Eastern Europe. In 2022, Turkey had 56 gigawatts of renewable energy installed capacity, and this accounts for more than half of the country's power capacity mix. Undoubtedly, the key factor for that prompted the sector growth was the endorsement of the Paris Climate Agreement by Turkish Parliament in October 2021. Having the official ratification in place, the Turkish government unveiled its National Energy Plan in January 2023. And in this plan, it's committed to achieve carbon neutrality by 2053. According to this energy plan, nearly 190 gigawatts in power plant capacity should be added to the system by 2053. This is actually an impressive growth of 104 gigawatts compared to the end of 2022. Renewables are anticipated to contribute a substantial 74% of the new additions, and in nominal terms, this means that 77 gigawatts of renewable capacity should be added to the grid. The share of green electricity in overall capacity is projected to rise to 64.5%, which is a substantial increase from the 54% recorded as of end 2022. The national plan of Turkey has set targets for specific renewable energy sources. Namely, by 2035, the country is planning to reach a solar power capacity of about 60 gigawatts, and more than 9 gigawatts of solar projects are already installed by the end of 2022. Wind power plants are projected to reach a capacity of 29.6 gigawatts, and this includes 5 gigawatts from offshore installations, which is nearly tripling the capacity achieved at the end of 2022. Additionally, the development of hydropower plants aims to achieve a target capacity of 35.1 gigawatt by 2035. And this is considerably higher compared to the 31.6 gigawatts recorded at the end of 2022. Overall, there are many favorable factors that support the development of renewable energies in Turkey, and these are rich solar and wind resources, hydro potential, and a commitment to energy diversification, and also a strong government support. However, political and economic challenges, grid integration complexities, including but not limited to insufficient grid access, as well as financial barriers, are posing constraints to the sector growth. Additionally, the market in Turkey is affected by global supply chain issues and component price pressures, such as increased polysilicon costs, for example, and all this has a negative impact on project realization and are generally increasing the cost of electricity generation from renewable energy sources. So, third in terms of capacity in Central and Eastern Europe ranks Romania. Olga, please go to the next slide. Romania has made some significant expansion of renewable energy sector. The capacity of renewables constitutes 60% of its total, and this is data that we have from the International Renewable Energy Agency. The local renewable energy installed capacity includes 6.6 gigawatts of hydropower, and this is the primary renewable energy source in Romania. We have 3 gigawatts of wind power and 1.4 gigawatts of solar power installed capacity. In terms of generation, renewable constitutes 41% of total electricity generation, and this is the data as of the end of 2022. Hydropower accounted for 25%, wind accounted for 13%, and solar for about 3% of overall generation mix. Despite these achievements, Romania has encountered a stagnation phase in the past few years. Notably, cumulative installed renewable capacity remained static since 2014. And the slowdown is undoubtedly attributed to the suspension of green certificate issuance in 2013. This measure was taken after a surge in new installation that we witnessed between 2011 and 2013. Looking forward, the situation looks more optimistic. Plans are underway to add around 7 gigawatts of new capacity, with a major focus being put on solar installations. Romania's integrated national plan in energy and climate change outlines the goal of installing 5.1 gigawatts of solar and 5.3 gigawatts of wind capacity by 2030. In addition to the capacity expansion, the country is also looking to increase the number of prosumers. It's interesting to note that utility-scale solar projects are gaining momentum in Romania lately, with significant developments led by the local company Complexul Energetic Oltenia. This company is deploying a 310 megawatt of solar capacity at a coal-powered facility. Furthermore, international investors have announced plans to build a massive 700 megawatt solar park in Arad County. Despite the advancement so far, Romania faces several major constraints hindering the development of renewable energies. Among these, regulatory challenges add complexity to the renewable energies landscape in the country. Some example is the implementation in 2020 of new procedures for the sale of agricultural land and the requirement to obtain a soil quality certificate. Those requirements are anticipated to complicate project development, particularly affecting options for solar and wind investments. Moreover, as in other markets in Central and Eastern Europe, limited grid infrastructure has led to stagnation in renewable energy power development. Finally, the absence of supportive government policies and delayed upgrades to the national grid, especially in the East, in South and Southeast regions, have resulted in overloading the local grid capacity, and this is impeding further investments in renewable energy projects. So, if I should describe in one sentence the current situation of the renewable energies market in Central and Eastern Europe, I can say that despite the many challenges that the sector is facing, the commitment of the nations in the region to diversify their energy mix and bolster energy security, particularly in the wake of the European energy crisis, has set the stage for some significant developments in the region, and this is only the beginning of the process that we are going to see in the coming years. Olga, over to you.
Thank you, Nicoleta. It was very interesting to understand how the dynamics of the sector are changing and what the results show. For those of you who are not our users but would like to explore the potential of access to our data, we encourage you to contact our business development manager, Zoltan. And now I will be happy to move to Radoslav and Julian, who will introduce us to trends in valuations. Radoslav, you should
Thank
be
you, Olga. Yes,
now ready to share your screen.
All right. Switching to the presentation.
Wonderful, we can see it.
Thank you. In my presentation, basically in the Mazars presentations, we have two general sections. One has been devoted to the valuation trends and multiples, and the other one to more general comments by Julian later on. My valuation section is divided into a general outlook, top-down review of the recent energy trends, as you can see in a moment. Then I'm going to show you three analyses, one of which we have performed by ourselves, and other two are available in the market but are interesting to look on. So in terms of the general trends in different energy sources, we can see a growing interest in the battery energy storage systems, which many crediting banks are asking how to value and how to model. And excuse me. And you are going to see more often combined kind of investments in which the battery energy storage systems constitute part of the whole investment, meaning there will be investment in wind farms and solar farms and the battery energy storage systems accompanying them. In terms of hydrogen, there is the typical white hydrogen, which is drilled from geological deposits, deposits of which were actually quite recently discovered in huge amounts in France and in Morocco. But you can also produce the so-called green hydrogen when you want to do it in an electrolysis procedure that requires energy to be delivered. And by refraining from using the fossil fuels, you can use renewable energy sources, thus receiving the green hydrogen. And one of the recent developments with that regard referred to the H2 Westküste, a green hydrogen production plant of 30 megawatts, which has just been abandoned by several of investors, in which the Danish Ørsted Germany was the leading one. And also just before that, a similar investment has been abandoned also by Ørsted in the UK, in Hamburg refinery. So this gives you a perception that these kind of investments need to be carefully considered when doing valuations, and perhaps some specific risk as a component of the discount rate should be taken into account. In terms of natural gas, we can see the results of the destruction of Nord Stream 1 and 2 as a result of breakout of war in Ukraine. And that caused that several countries have ceased their dependence on Russia as a supplier, and they have turned to other import sources like America or the Middle East. Poland, for example, is using the Norwegian gas fields and delivers them by the Baltic pipe. Poland is also leading the efforts of transformation in this part of Europe of its energy sources by investing heavily in nuclear energy reactors. The Polish government has chosen the small modular 1 gigawatt reactors, the first of which is going to be commissioned in 2029, and 99 others are to follow in the next 10 years. Also, hybrid systems are something that pops out quite recently, when you can see investments that combine, as I mentioned, the solar with battery energy storage systems, but you can also see investments that combine solar with wind power plants, and also hydrogen with natural gas, as was the case with Haida, the abandoned investments in Germany. There's also several other factors, less connected to the energy sources, but more to regulatory, economic, or technological environment. So when you look at the most recent regulatory requirements, you will see the rise of the environment, sustainability, and governance requirements. And we can expect in the longer term that meeting of these requirements will translate into an increased deal value, especially when you take into account that 85% only of the traditional wind power plants may be recycled, and there is a huge cost of the turbine blades that are left with no working way of disposing of them. And the recognition of this cost will definitely be perceived as a detriment to any investment, and also it decreases the deal value by recognizing this cost. So the general point which I'm trying to make is, as long as you're trying to recognize the cost at the end of your investment, you'll be more interested in boasting about meeting your other environment and sustainability and governance goals. One of the factors that speaks in favor of any investment project is that you have a purchase power agreement in place that translates into the project's sustainability or stability, rather. That should translate into a greater deal value. On the economic front, we can see more financial resources coming to the major market of the CEE, which is to Poland. The EU funds from the National Reconstruction Plan have been frozen for Poland for quite a long time, and it's been just recently that the European Union has promised to pay out an installment of 10% of the 55 billion euro that is prepared for Poland. And these funds, when you go to the government website, they are going to be used partially to develop, as it is expected, even 1,500 megawatts of offshore wind farms. I do encourage you to visit that site and have an opinion of your own where this money can go and how stimulate the market. By the way, this presentation will be delivered to you, so there is no need to take notes. One of the other factors that we can see is the growing popularity of decentralized energy systems, like the solar and wind installations, and that boosts the advancements in their technology. One of the recent cases that I came across was the abandonment, or actually I should say an impairment test that was carried out in terms of free-span belts manufacturing plant, because of the fact that these free-span belts are becoming obsolete as more complex and more reliable direct drives are taking the share of the market. So whenever you make your assumptions with regard to the expected useful life of your assets, you need to take into account such advancements in technology because your asset may be obsolete. Now this leads me to the 3 slides which are devoted to the analysis that I have performed. And as you can see, the time scale has been divided into 2 basic time periods, with one of them being between 2016 and 2019, as I called it, the pre-COVID time, and post-COVID starting from 2020 and up to now. We were using information database to derive the information on the deals, and you can see that there is a hike in those deals taking place between those 2 periods. And the significant change takes place basically in 2 energy sectors, which is the solar photovoltaic panels on the right, and in the middle is the onshore wind. There's been 304 transactions in post-COVID compared to 66 deals only in the previous period, but only half of those have their deal values revealed. And this and other graphs have been produced based on those transactions for which we were able to see the deal value. When you look at the value of those transactions below, you can see that there is one significant source of energy which does not correspond to the volume of those above, which is the offshore wind. This is basically one transaction that was announced just recently in Poland, and it refers to the Baltic power farm of 1.2 gigawatts, which is being delivered by Orlen Group in consortium with Northland Power. This power plant will be 23 kilometers north of the Baltic coastline, and is going to enter construction phase next year and start operations in 2026. And another point of interest in this graph is that Poland, when you look at the onshore wind and solar photovoltaic powers in the post-COVID section, 59 of the graph accounts to Poland, and 41 in terms of solar photovoltaic investments were delivered in Poland. In the next slide, we have analyzed the deals by size and by country. As you can see, Poland seems like the only significant market in the CEE, especially in the recent years. where most of the deals took place. And in terms of value, that clearly translates into higher numbers, as the chart shows. I think there is no point in focusing too much on this. Rather, the next slide is more interesting. As I mentioned, two energy sources are most prevalent, which is the onshore wind farms, and the other one being the solar panels. And when you depart from the division into two time periods of pre and post-COVID and just have a look at the broader time scale, this time including the 2015, you will see that there were almost 200 transactions in the CEE, and most of them in the onshore wind and solar energy sectors. I have added the average million of euro versus 1 megawatt multiple to show you the prices, how they developed throughout the years. And as you can see, there is a downward trend marked by the dotted line, which led from 1.35 million euro per 1 megawatt to 700,000 euro per megawatt in 2023. And what's worth mentioning is that there is a decline this year, and not only in terms of the CEE, but also in the lower graph in Poland. When you strip that conclusion into those two energy sources, you can see that the onshore wind farms are much more costly to invest, while the solar panels become maybe not a commodity, but definitely cheaper per 1 megawatt. You sometimes come across portfolios of investments which consist not only of standing investments, but also of those in the development phase. We're observing a trend to value such investments until the ready-to-build stage, depending on their development. So, for example, in the bottom section of this comment, you can see that roughly 100,000 zloty is allocated to different regulatory stages of this development, of this project development, with the most, with the most value allocated to the connection decision granted by the power company. In the next slide, there is a reference to a presentation, to an analysis performed by Statistica Research Department in the middle of this year. This time it was based on almost 1,300 companies, where they looked at the EV versus EBITDA multiple, depending on the source of energy. The conclusion was that the general multiple for the entire energy and environmental services market was 12.5 in 2003. But when you look at the particular energy sources, you can see that the highest multiple was observed for the green and renewable energy, which was 14 in 2023. And in this subsector, we also were able to observe the highest growth between 10 and 14 compared to the other ones. And also a point worth taking note of is the effects of the breakout of war in Ukraine, which generally resulted in the fall of such multiples, but with the exception being the utility and power subsectors. This may be related to the fact that in such long-term investments, there is state involvement a significant factor, and perhaps this gives more stability to those investments. And lastly, the analysis performed by a company called Microcap analyzed 202 public companies of 41 countries, also globally, and they dug deeper into the financials. They have analyzed the last 12 months of revenue and EBITDA and net income of those companies. The results were then stratified into 4 sizes of companies depending on their revenue. So you can see companies between 1 and 10, 10 and 100 to 500 and above of €1 million. And the results were presented by reference to the particular energy sources on the left. Then the conclusion, which I want to draw your attention to on the right, you can see that the chart above shows the average multiples of 5, 18, and 33 for the revenue, EBITDA, and net earnings, respectively. But what we predominantly use in the valuation approach is the median, which is which we are most interested in. And these multiples are a little lower, with 3.9 for the sales and 13.8 for the EBITDA. And by the way, that corresponds to the 14 which I showed you on the previous slides over here. And EV to net income 27. So I think I was able to present you the results of the 3 analyses, gave you some updates on the recent developments in the energy sources and the regulatory environments. And if Julian is ready, I would gladly turn to him.
Julian, you should be able now to present your screen. Thank you, Radosław. Very insightful.
Can you see my screen?
Yeah.
Excellent, excellent. Okay, so I'm mindful of time, so I'll try and be reasonably quick on this. We have 2 slides here looking really at, apologies, my laptop seems to want to move my slides forward all the time. We're looking at valuation of new sectors in the context of renewables, and also how market dynamics in the renewable sector can be seen to change over time. So there's a couple of conceptual points I want to make here. First is that new sectors can mean a number of things. So a sector or a subsector in renewables can be new to an investor, but not new to other investors. It can be new in a region, but not new to other regions, or it can be genuinely sort of new, like battery storage was a few years ago, or green hydrogen is today. And on the left of the slide, what we've got is a little graph that tries to set out the fact in a visual sense, the way in which the renewable energy sector is not homogeneous, it's not a single thing. There's a wide range of risk profiles within it, and as a result, a wide range of returns required by investors in those subsectors. And we've tried to equate these subsectors to wider infrastructure, so things that look very much like core infrastructure investments. So availability projects, which would incorporate OFTOs, moving through regulated or highly contracted, then projects with price and volume risk, but with some certainty, then higher price and volume risk with some technical risk, and into what we'd call value add, so platform and deployment risk type projects. So when looking to value, and by value we don't just mean the application of an independent external valuation, but looking at the returns required for an investment as an investor in one of these sectors, we would have a number of questions to try and map the sector that you're looking at across to a sector that you're more familiar with. So the first would be, does it look and feel like an infrastructure investment? So is it based on proven technology, even if the technology is being applied in a different way, for instance? Are there natural barriers to entry? Are there downside protections? Can you put in place a set of assumptions that look at revenues and costs in the long term? And are you then able to assess the extent to which those assumptions might change over time? And then what sector does it look most like? So, if we take an example of the third box up in that table where you have price and volume risk. So in the renewables space, you're looking at, solar or wind or hydro projects with PPAs in place. And that might equate to a toll road or an airport or a port in the wider infrastructure space. So you're looking at the broad risk profile, and then you're trying to identify the key points of difference. And then when doing that, you're looking to adjust either your cash flows in terms of a sensitivity analysis within the financial model, or adjust the alpha in your discount rate to try and reflect those points of difference and hone in more closely on the returns that you might require. And then there are other adjustments that you might need to make. You might need to make an adjustment for a lack of market. If it is a genuine new sector, there won't be that many investors in it, and that will inevitably mean that competition isn't there. Is it a really small project? Is it a really big project? And will that make a difference to the returns that you require? Is there an ESG story? Is it a positive ESG story, or is it a negative ESG story, assuming that there is one? And then, is this the beginning of an opportunity to invest in similar projects over the long term? And as a result, is there a strategic premium that you might want to incorporate into your valuation or your investment case to reflect the fact that if you get in there early, you have an opportunity to be at the front of moving that particular sector along in investment terms? So I think the final point I want to make on this slide is that new sectors or assets in new sectors are not necessarily inherently more risky. Going back to what the definition of new, if it's a well-established sector, but it's just new to you, that doesn't mean that because it's new to you, the sector is suddenly riskier than it is for other investors. But there is, and we'll come on to this now, there is a way in which new sectors over time start to generate maturity and as a result have lower return requirements. So again, conceptually, the way we look at this is that there are factors internal to a sector, apologies for my laptop, and then there are factors external to a sector. Internal to a sector, things change over time, and this has been seen back in the day in solar, in wind, and we're currently going through this process in battery storage. So looking at three main areas of assessment, apologies, revenues. Increasing data and experience means that investors can have greater certainty over time. It also increases the potential to contract longer term, which again drives revenue certainty in a virtuous circle, because then more contractors will be willing to enter into long-term contracts, and investors will have more confidence. In terms of counterparty risk, as a sector matures, simply it gets bigger, and there are more contractors, and there are more suppliers, and there are more off-takers. and that means that you have a choice and you're able to mitigate revenue and cost risks because simply you have access to a greater market of counterparties. And then in terms of the technology, the track record over time generates confidence. So investors are able to learn from experience, and as a result, they can have greater confidence around key assumptions, and that translates into a lower return requirement in the discount rates, expressed through the alpha. They're all factors really internal to the particular market of the sector that you're in, but external, there are sort of investment market changes over time. So the first is that transactions increase, and as you have more transactions, you have more precedents and you have more data, which allows investors to get a greater understanding of where the market is in terms of investment. It also allows for higher confidence of a successful exit for closed-ended funds or PE players. It also, apologies, the maturity of the sector allows for a move from unlevered investment, where there's no debt available, to levered investment. So you can bring debt into projects, which increases access to capital, which allows for larger projects. It allows for higher equity returns, albeit riskier equity returns. And then all of that leads to more market entrants, more M&A activity. So competition in the M&A space inevitably drives up prices. When you have lots of projects in the market, those projects can be aggregated so you can get larger deal sizes. And that generates economies of scale, which means that you can apply a higher value. And it also attracts different types of investors. And the larger investors will have a lower cost of capital. And all of those things are, again, a virtuous circle that leads to higher valuations. I think that's everything I wanted to say. So I shall stop there.
Thank you. Thank you, Julian. Thank you, Radosław. I'm sure that now our attendees are more familiar with what is happening around M&A activity and valuation trends in the industry. We are coming to an end of our webinar, so I will just go quickly to several questions. We will have 30 seconds for an answer, and for the rest question that we have in the chat, our panelists will try to answer you directly. So first, very interesting question that we have is from Magdalena. Out of the new technologies that may become increasingly important in CEE, which do you think is the most likely to grow in the short to medium term? I think, Julian, would you like to be the one who will cover it?
Yeah, I would say in line with other regions, battery storage is absolutely going to be a major area of investment focus over the next few years, particularly given the expansion of solar and wind projects in the region.
Okay, thank you. Next question from Piotr. How is Poland addressing the issue of an outdated power grid to support the growth of renewable energy? Nicoleta, can you cover that?
There are two major issues with the power grid in Poland. The first is with the coverage, and the main bottlenecks are in the north and the west of the country, where the available connection capacities are insufficient. And also there is the problem with the age of the transmission network. Most of the grid in the country is over 25 years old, and there are also stretches that are over 40 years old. To fix that problem, at the end of 2022, the Polish grid operator, PSE, signed an agreement with the Energy Regulatory Office to invest a huge amount, some 32 billion zlotys, to expand the grid, to modernize the lines, and those investments should be distributed among more than, if I remember correctly, 260 tasks, which means that this is a huge, will be a huge effort by the company. The plan has already received the approval by the President of the Energy Regulatory Office of Poland. And if implemented as planned, it will add some 4,300 kilometers of new 400 kilowatt lines by 2032, which compared to the current 15,000 kilometers means that the grid by the end of the period will be expanded by a third, which will be a major contribution to the expansion of renewables in the country, because it will largely simplify the connections, will shorten the process, and will contribute to the expansion of the share of renewables to total electricity generation.
Wonderful, thank you, Nicoletta. And the last question, as we are already like slightly over time, do you think that the declining trend of values, even for 1 megawatt of photovoltaic or wind farms observed in 2023, will continue in 2024 and going forward? I will leave this one to Radosław. I hope it's fine. Radosław, you're muted.
That's a difficult one to predict because there are many factors taking place. But in general, the price is an effect of demand and supply. So on one hand, you can see more money flowing into the Polish market from the EU funds, which should act in rising the price of available projects. But on the other hand, you get the supply factor from the fact that the Polish regulations are expected to be eased next year, so that more projects that have been frozen so far will be available on the market, which should drive prices down. So the effect of both factors will depend on the timing of those, and then you also get the perception of risk, taken into account the war in Ukraine. So I would bet that next year we're going to see stagnant prices as we observed this year.
Okay. Thank you, guys. And thank you everyone for participating in our webinar. As I said, for other questions, we will try to answer directly. We really appreciate you being here with us today. EMIS and Mazars CEE team wish you a great day and see you next time.
Thank you all. See you next time.